What's up, everyone? How are we doing today? It is June 2nd, 2026, and we are officially back with the YouTube videos, all the content and everything. Sorry about the hiatus. I was moving a bunch of stuff down from school, but no more excuses. We are back on the grind, back on the YouTube. And yeah, I took two winning trades today. They were both longs. They were both beautiful setups. And let's get right into it. All right, so coming into the day, I like to establish my daily bias. And what do? First thing, I'm just going to go in the daily time frame, right? What have we been doing for the last week, the last couple months? We have literally only been printing upwards. This is the most bullish order flow, most bullish highest time frame I've ever seen in my life. But obviously the daily doesn't tell you everything. So if we actually go in the 4 hour, we can get more confirmation. What am I looking for? I want bullish PD arrays to get respected. As you can see, we have multiple 4 hour gaps, and I want bearish to get disrespected, right? So if we go today, what do we have right here? We have this bearish 4 hour gap, and what did we do in the morning? We just completely disrespected that, and we are clearly pushing higher. Now, I like to make multiple draws on liquidity, usually a buy side scenario and a sell side scenario. And in this case, we can clearly see that this high is our main buy side liquidity, all-time highs. Personally, I kind of liked this high better, but I'll explain that in a different video. And our sell side, what do we have? We have so much low resistance liquidity all under us. And that is something like the most beautiful target ever. If I switch over to like the 15-minute time frame, we can literally see like this is so nice. And sweeping all of this out in one major reversal move is going to be amazing. Unfortunately, today we didn't get that. We instead went higher. But eventually, one of these days, we are going to end up sweeping all this liquidity, and it's going to be a huge grab, a huge reversal. I'm expecting it in the next couple of days. I'm not sure exactly when, but those are my two draws, right? We have our main buy side liquidity and our sell side. We have a ton of room to run down if we were in a bearish scenario, and we have a great draw on liquidity, a great liquidity pool for us to target at the top. Now, if we go into the hourly, let me just go in replay mode just so I can show you market open. Here's our hourly time frame. What are we doing? We have all of these bearish PD arrays, and what are we slowly starting to do? We're starting to disrespect them, right? Inverse this gap, inverse this gap. Now we're trading here. Now in this case, I want to see us retrace into a bullish PD array. So we have multiple options. We have this one bearish for value gap, we have this one bullish for value gap right here. We have another right here. Basically what I'm saying is that we have multiple higher time frame PD arrays that price can go to first before retracing up. And this is all in case of a 930 manipulation lower, which is what I like to see if I'm going to be going long. Why? Because I am looking at an equilibrium of this range. And what do I want to see if I'm going long? I want to be entering a trade in discount. And if you don't know what discount and premium is, essentially, if we are down here and we are going to take a long, we are trading in discount because we have so much more room for RR. We have so much room for the trade to play out versus imagine taking a long up here. You only have this little room to actually take your profits. So now in this case, what do I want to see? I want to see us come into the market, manipulate lower into one of these higher PD arrays, and then take longs. It's as simple as that. Now on the lower time frame, what do we also have? We have all this low resistance liquidity above us ready for us to just take out. Yes, we have some below, but if we were in bullish order flow, respecting bullish PD arrays, disrespecting bearish PD arrays, there's no way I'm going to be shorting in these conditions. Now on the hourly chart, what did we create here? In this bearish PD array, in this bearish for value gap, we do have this hour intermediate high. Now, intermediate highs are a fantastic target. Price loves to run back to that. So that's exactly what I was targeting. So 1 minute into the market, we start dumping and we just keep going lower until what do? We tap into that hourly fair value gap. I'm going to turn on this indicator so it's easier to see. Here we go. Look, one hourly fair value gap right here. We also had another here, which we could have just tapped that and then continued on after sweeping that intermediate low. However, price just started dumping. Honestly, I really didn't want it to dump too much. However, it low-key put us in a better discount of the range, so I'm not going to complain. And once we tap that on the 30-second chart, what do we have? We have a 30-second inverse fair value gap. We get beautiful displacement. And right here is a classic AMD model. If you do not know what that is, right? We had a 30-second accumulation period, right? We're just getting pure chop. Then we manipulated lower all the way down into that hourly gap that I mentioned, tapped, and then we started distributing upwards, right? And as you can see, this plays out perfectly. We ended up targeting that 930 data wick, or that 930 high from market open, and what ends up happening, completely smacks it, hits take profit. Beautiful, beautiful trade. Now, other confirmation with this trade was the fact that we did have an S&T with ES. So if I go ahead and show you, as you can see, ES did not end up sweeping that, and Nasdaq did. So off an hourly gap, 30-second AMD model with an SMT targeting the 930 high. This is a beautiful setup. This is easy, easy money. Absolutely perfect. Now, if you did not want to enter off a 30-second, what do we also have? We had a CISD. Now, this is where I entered. I didn't enter off that 30-second because I was just waiting for more confirmation. And once we had that CISD formed, this is where I entered. So my entry was more around here. And I know a lot of people didn't want to take this trade because of the 5-minute bearish gap. That is also completely valid. However, when we just have such bullish buys throughout the day, and there's so much conviction that price is going to continue higher, I don't really mind this 5-minute gap. And one thing I did in my trade is because of that, I had my break-even point at that 5-minute gap. So what ends up happening is price would shoot up, shoot up, shoot up. You have the bearish gap, and that's where my break-even point was, because I knew that there was a potential for price to reject off of the gap, and we could have just seen us go up here and then just start dumping immediately off of that. However, if that were to happen, we wouldn't have lost any money. It would have been a break-even trade, so that's a win. And if it didn't, then what happens? We continue pushing higher. We displace. We disrespect that gap, and we take our profits at our data wick, that 930 high. And the next trade was a simple continuation long. This was that initial trade we took. And what do we look for continuation longs? We wait for price to go higher, create a new gap, whether it's a 5-minute, whether it's a 15-minute. In this case, it was a 5-minute gap we created. And what do? Instead of taking a long up here to nowhere, we wait for structure. Structure is the most important thing in trading. We wait for structure to form. 5-minute gap created. We got a retest into this 5-minute gap. And now I know some people did take this 5-minute inversion, right? As you can see, we slightly displaced higher than that. We disrespected this bearish fair value gap. However, I really wasn't too confident in this just because I still wanted more confirmation. So I faded that first 5-minute, and after that, I was just waiting for more confirmation. And what did we get? We got a completely new continuation, a new 1-minute confirmation. And once we created that new 1-minute bearish gap and we displaced through it, this is where I took my entry. And honestly, this is one of my favorite setups. Why? Because we have clear targets and clear zones for everything, right? We have our stop loss. Obviously, stop loss is probably the easiest thing to find out. I mean, you can adjust it based on rejection blocks and whatever it is, but I had my stop loss at the wick of these candles. Now, our target, relative equal highs. I've stressed in multiple of my videos that relative equal highs are one of the strongest draws in liquidity. This is that new high we created, and when we have continuation longs, we want to take longs to that point where we started dumping from. Right? Super simple. And the best part is our break-even point. We had a very, very clear break-even right at this swing high. So what do? That is exactly where I put my break-even. We displace through this. I enter my trade, push up, push up. This is my break-even point, move my stop loss, and we just run up. I did not get stopped out here. I almost did. Luckily, I didn't. However, we ran higher, and we ended up smacking profit on that trade. I mean, this is a simple continuation model. I've been over this 1,000 times. If you watch any of my videos, this is probably one of the most common trades I take. Simple continuation model. And this 930 manipulation, also one of the most common trades I take. So I hope that cleared up any questions. If there's anything else you want me to make a video on, or anything in general you need help with, please let me know in the comments. I'll respond, DM me, whatever it is. I got you. But yeah, if you like this video, please comment, like, share, whatever it is. Anything will help. And I will see you guys in the next one. Peace.